Hello and welcome everyone to our session on consumer competences for DFS. I'm LJ Rich, your moderator for this afternoon. Thank you for joining us for the next hour and a bit. The Financial Inclusion Global Initiative, FIGI, is a partnership between the World Bank Group, the Committee on Payments and Market Infrastructure of the Bank for International Settlements, and the International Telecommunication Union, ITU, funded by the Bill and Melinda Gates Foundation to support and accelerate the implementation of country-led reform actions to meet national financial inclusion targets and ultimately the global universal financial access goal. FIGI funds national implementations in 3 countries, China, Egypt and Mexico, supports working groups to tackle 3 sets of outstanding challenges for reaching universal financial access. 1, electronic payment acceptance. 2, digital ID for financial services. And 3, security, infrastructure and trust, and hosts the symposia. This is the 3rd and final edition of the FIGI Symposium. The FIGI Symposium provides a forum for dialogue amongst telecom and financial sector authorities, financial service providers, digital financial services, DFS providers, and related stakeholders to share experiences and perspectives on scaling up DFS. This session will This session will examine the core competencies that consumers of digital financial services in emerging economies should ideally have to be able to effectively make use of those services to meet their basic needs. The DFS Consumer Competency Framework, developed under the FIGI Security WG, categorises the core competencies under different skill sets and considers the competences required for the digital financial service transaction life cycle, in particular for women. The skill sets and competencies constitute the basic elements for a curriculum that could be used in the development of a consumer literacy programme by national authorities and DFS providers. We will also hear from other panellists about international efforts to tailor outreach and consideration for the inclusion of women. So let's start off with some introductory remarks from each panellist. Jamie, we're going to start with you.
Good morning, LJ. Thank you for having me here today, ITU as well. I have the pleasure of presenting the working group's tour de force, which is the DFS Consumer Competency Framework. However, this was a group effort, so I feel very privileged and hope that I present it and do it justice. But also big thank you to the group because this was provided, they provided a lot of support. So while I share my screen here. Oops. Sorry, having difficulty finding it. Of course, that would happen to the first speaker. There we go. Okay, thank you. So before I talk about the actual substance of the competency framework, I'm going to talk about why we decided to do this framework. Basically, consumer competencies really directly impact financial inclusion. And what we found is that they're low globally. So today I'm going to talk about financial literacy levels as a stand-in for competency levels. They're not the same thing, but unfortunately there's not a lot of data that's been widely studied on competency levels and comparing country to country. So for today's purposes, I'm going to talk about the Standard & Poor's Global Literacy Survey as a stand-in for consumer competency levels. Essentially, Standard & Poor's measured globally probably about 30 different countries, and they looked at basic financial numeracy, ability to calculate compound interest or to understand the concept, inflation, and consumers' ability to assess risks. And they determined that it was very, very low globally. Essentially, only 1 in 3 persons on the planet has the competencies needed to safely use financial services, and digital financial services, as we know, are even more complex. Further, there's significant variations in age and gender. Youth noticeably have lower competencies and skills and more risky behavior than the rest of the population. And we also sometimes see in the elderly populations that competencies take a dive, and that has a direct relationship, of course, with mental faculties. So just to give you some ideas about the disparity and how significant it is, I selected a few countries here. So we see in Kenya, using the World Bank's Findex data, we see that 82% of Kenyans, possibly even a little bit higher now, have access to financial services, to a formal bank account. Yet only 38% per the Standard & Poor's study is actually considered financially literate. We see an even greater disparity in India. We have 80% which have access and only 24% have the skill set and the knowledge to safely use financial services. And similarly, this is a global problem. So I put USA statistics. We have 93% who have access to financial services, but only 57% of the population is financially literate. So we have this disconnect. And why is it a problem? Well, it's a problem because financial consumers then may have access to and are using products, financial services, DFS products that they don't really understand. Just to give one example from the credit sector, if they're using a digital credit product, that might have a very short tenure, it might have a very high interest rate, and it may be unaffordable to the financial consumer to be using. So in these cases, we worry about the risk of over-indebtedness. And again, this risk becomes more significant when you're dealing with populations that have lower competency levels. So again, you have the youth population. And we've seen from some of the data coming out of CGAP surveys in East Africa that youth may be inappropriately using digital financial services for gambling, or we can see from the big data that they're using them on Friday and Saturday nights, not necessarily for a productive purpose. Then lower financial literacy levels and competency levels also mean that you have a vulnerable population that's more susceptible to financial frauds and to sharp industry practices. And essentially this correlates into a more difficult job for the financial services regulator. So who, where, how do we start this long journey to achieve DFS consumer competencies? If you've had a chance to look at the document, it's very dense. But it does provide a lot of entry points and a lot of interesting ideas for means for different diverse groups to intervene on the subject and to develop programs. Curricula was mentioned. Just to give you an idea, this is the list of entities that provided input onto the competency framework that we developed as a group. So you see we have regulators from telecommunications, from the financial services sector. We have an advocacy group from India, Cuts International, who will be speaking a little bit later on in the panel. And we also have the Federal Reserve Bank from St. Louis, which does produce a lot of financial literacy materials, education materials, specifically for the schools, for the high school level. So you see that these diverse stakeholders, there's a point of engagement on this topic and a point where everybody can look at the issue. I, for example, am a public interest advocate, and I do work on this issue, financial literacy, digital financial literacy, from the aspect of legal rights and consumers' right to redress, as well as that they should be reading the terms and conditions of financial services agreements. So in our guide, we essentially have divided up the topic by relationship with the financial services provider. You have the pre-transaction phase where consumers are doing their shopping, their comparison shopping, and they're looking to purchase a product. What information is available? How are they doing this research about what services are appropriate to their needs? We have the actual transaction where the consumer decides to make a purchase. And then we have the post-sale part of the transaction. What happens if the service, the quality of the service provided is not up to par? What happens with a consumer who is harmed and actually needs access to redress? So we look at these phases of the relationship and we assess the skills, the knowledge, and also the proactive behavior that we think the DFS consumer needs to take in order to use these products safely. And at all of these phases, they must possess specific knowledge, skills, and then actually do something with this knowledge and skill set that's in their own best interests. So of these 15, what's the most important one in my opinion? I think it's to actually look at and read and understand the terms and conditions of use, to look at the user agreement and be able to dissect it in terms of looking for pertinent information for the consumer, the DFS consumer. So can you look and find all of the costs and fees? Can you look and find the penalties and any limitations on your right to access redress? What do the data privacy clauses say? What does the contract say about passing risk onto the user? So all of these things, we know that consumers don't necessarily read the terms and conditions, but there are really, really basic reasons why they're not reading them. They're long, they're written in legalese, and consumers don't know what to look for. But it is possible to teach them some shortcuts. And so in a particular course that we had in Indonesia with youth students, we actually taught them to assess and to analyze a user agreement. And we found that they were much more likely, between 60 and 80% more likely after the course to read terms and conditions before using the financial service. So consumer competencies, we believe, are really lifelong, but just some basic pointers on how to approach the task. We think it's very good to start with young, youthful learners. The younger, the better. So that means it's also necessary to engage with parents as well as the children who are learning about new DFS products. And it's essential to ensure that the teachers also have these competences. You don't want teachers who themselves have doubts about their own ability and are insecure about topics. You want them to feel very confident in their own abilities. And you also want to allow for experiential learning. You can't have a situation whereby youthful learners are subjected to a lecturer who drones on and on about the topic. They really need to be engaged. This is essentially the video game generation that's very, very, I think has a very short attention span. So I hope this has inspired you all to take a look at the competency guidelines. As I said, there's a role for everybody in it. Unfortunately, there's not a lot of wholehearted activities on the topic as of yet, but we hope that we will be able to inspire more in the future. Thank you.
Wow, what a great way to start. Thank you very much, Jamie Soley. What an excellent start. And we've got another one next, which is going to be Amal Kulkarni. Welcome and thank you very much.
Thank you. Thank you to the Financial Inclusion Global Initiative for giving me this opportunity to speak on this very important issue of consumer competencies in digital financial services with a particular focus on women. I think the importance of this issue has increased manifold in the light of crushing impact of second wave of pandemic, which is having on developing countries like India. It is clear that there is substitute for equitable and inclusive recovery, and digital financial services will need to play a key role in this regard. For this to happen, not only consumers, but service providers as well as regulators will need to enhance their competencies to bridge the gap between DFS and potential consumers, most of whom are likely to be poor, rural, women, new internet users, and belong to other vulnerable groups. And it is heartening to note that we are witnessing progress on this front. For instance, the Reserve Bank of India has recently launched a national strategy of financial inclusion, which recommends adoption of a multi-stakeholder approach focused on building knowledge, skills, attitudes, and behavior of consumers for achieving their financial well-being. I think some of these principles are also included in the consumer competency frameworks, which Jamie just talked about. And it is heartening to note that regulators around the world, particularly India, are already working on this issue or are intending to work on this issue. This national strategy for financial inclusion focuses on a 5C approach of developing relevant content, building capacity, leveraging community-led models, deploying adequate communication strategy, and enhancing collaboration among stakeholders. So great vision and great ideas, but it is important to put these ideas into implementation, and that is where most regulators and most of the agencies are sort of falling behind. And we sincerely hope that this would not be the case in terms of DFS. Given that Reserve Bank of India is also likely to undertake periodic surveys on digital payments to understand consumer behavior and challenges. And hopefully these findings will be used to fine-tune policy and practices when it comes to DFS. I think we are in India, we are also witnessing a lot of reforms from the industry to bridge the gap between consumers and DFS products. We are witnessing innovations in terms of product designs and user interface, from offering products in different languages to using familiar color code and image codes, to use of labels, to use of audio and video tools to communicate terms and conditions clearly to consumers. We are witnessing genuine attempts to bridge the information asymmetric gap and reach out to traditionally excluded groups. As Jamie has rightly pointed out, that one of the key ingredients in terms of consumer competencies is the ability to understand terms and conditions and figure out whether that product which is being offered to a consumer is really fit for the consumer. But that is the most difficult aspect in developing countries like India, given consumers come with varied backgrounds, with varied understanding of languages, and with different income and understanding capabilities. So that is why I think there are some dedicated, concerted efforts which are done, which are being practiced by the service providers in collaboration with think tanks and researchers to break new ground on some of these issues. Going forward, we are likely to witness innovations on voice-enabled payment products and enabling digital payments on feature phones or non-smartphones to make the space more inclusive. As you know, DFS for DFS, a pre-requirement is a smartphone or ability to transact digitally. And in most countries, including India, the smartphone population is just 30% of the total adults, and that is also sort of estimation on the higher side. So to reach out to the non-smartphone population or population with feature phones, these innovations to be able to use DFS on ordinary phones and reach out to consumers so that consumers are confident to navigate this space are very, very important. However, most of these initiatives which are done by regulators and service providers are mostly focusing on adoption or onboarding consumers, and they fail to recognize the importance of value chain approach, as was highlighted in the competency framework. So seamless adoption is necessary, but not sufficient to ensure sustained usage of digital financial services. As indicated earlier, the competency framework summarizes adoption challenges during the pre-transaction phase, but it is equally important to focus on risks, experiences, and concerns during the transaction and the post-transaction phases. There are concerns, these concerns range from mis-selling, non-compliance with suitability requirements, fraud, data leakages and abuse, coercive loan recovery practices, including threats, suboptimal grievance redress, absence of individual bankruptcy and insolvency regimes, and inadequate transparency and accountability frameworks. And many of these are common across jurisdictions and from sub-Saharan Africa to South Asia. And there is a real need for regulators and service providers to come up front and deal with these issues. For instance, we had some cases of predatory lending in India, wherein vulnerable consumers, particularly women, were receiving threats, and these unfortunate stories have ended with suicides in the part of consumers because they were not able to deal with stress and the threat which were given by service providers or recovery agents. So all these needs to stop. And here is where civil society and community organizations like CUTS are doing their bit with innovations like consumer care centers, intelligent interactive voice response tools, community radios, and leveraging community safety-led nets like self-help groups and farmer producer organizations. We are trying to plug information gaps, handhold consumers, and capacitate them to confidently navigate digital ecosystem, to raise their grievances and obtain redress. In other words, we are trying to do our bit to enhance consumer competencies and also put the mirror in front of regulators and service providers. However, there is one more problem, and which is important for this discussion, which is that regulators and service providers are yet to recognize the importance of a gender-conscious approach to foster adoption of digital financial services, despite enough evidence in support of the same. Studies have shown the importance of women role models, women collectives, and involving family members of women, particularly husbands in case of married women, to foster a safe and secure environment for women to confidently learn and navigate digital financial services. These other family members and members of the society usually act as gatekeepers for women to access and benefit from digital services, and thereby they can act as enablers or disablers of DFS use by women. And it is therefore very important to take their perspectives and take them into confidence when we are speaking or designing DFS products for rural women. And therefore, their competencies will also need to be built in addition to the end user or competencies of women when you talk about consumer competencies. At CUTS, we have just concluded financial literacy programs for women, by women. We are now beginning to study the impact of intra-household bargaining power between women and men and DFS usage by women, and accordingly design pathways for greater financial access for women. So what is the bargaining power between a husband and a wife in a family, and how can that be impacted by DFS usage, and how can that result in women economic empowerment is something that we are trying to study. It is also being realized that digital financial services are not an end in itself, but a means to an end. That is enhanced economic opportunity for a family as a whole. This needs to be kept in mind while designing use cases for women DFS users, which will need to take into consideration income fluctuation, uncertainties, and lack of physical collaterals, and economically backward lack of collaterals with economically backward consumers. For instance, what we are seeing in developing countries is that a lot of DFS products which are designed for rich urban men working class consumers are thrust upon poor women consumers who do not have consistent income, and they do not have monthly paychecks. Their income is seasonal from one agriculture cycle to other agriculture cycle. So all these issues need to be taken into account while designing products for them. Similarly, these women do not have any collaterals for obtaining digital credit. So therefore, there is a need to work on in alternate data-based credit and other such frameworks which can leverage their credit history to provide them loans and credit in an equitable manner. That is why I think it is collective responsibility for consumers, regulators, and service providers to enhance their competencies to ensure a fair, inclusive, and equitable DFS ecosystem. I think I'll just end there. Thank you very much for this opportunity.
Thank you very much to Amol Kulkarni there. And I'd now like to invite Margaret Miller for her opening remarks.
Thank you so much, LJ. And I just want to start by thanking the ITU, the CPMI, and the Gates Foundation for their wonderful partnership in FIGI. It's really created a very valuable space for doing cutting edge research on what's needed to advance on financial inclusion through digital financial services. And I think that the topic today is really central to all of that agenda, because if you have consumers who are not ready to really engage effectively, sustainably, and in their best interest with digital financial services, you have a real problem, as we know. And coming after Jamie and then Amol, I feel like a lot of what I want to say has been said, but I think that I think the community is very much on the same page about the importance of this topic and the importance of looking at it in a very holistic way. I'm going to focus especially my remarks around the gender aspect of the discussion. And we know that there is a persistent gender gap in access to financial services. The Global Findex data collected at the World Bank with the support of the Gallup organization has shown in every single wave, and we're in the field right now collecting data which will be released in 2022, that there's a persistent gap. It's 7% when you take all nations, developed and developing. When you look at emerging markets, it's 9%. And when you look at the poorest countries, it goes up to 13%. So we know that women aren't using financial services at the same rate as men. And we know also that there are gaps in financial literacy, measured by kind of both knowledge and some skills. But we know also that, asking questions alone doesn't necessarily reflect how people behave or, give us a full perspective on what are the barriers. And one of the things that we've really tried to do in our work at the World Bank is to look at this topic from the aspect of the kind of the behavioral aspects. And I think this is very much in line with what's been said earlier today. It's more than what is just known or what can be answered in a survey. It's what are the capabilities, the skills, the ability to actually take decisions that people can show. And that often involves social norms, it involves psychology, and understanding how people will be interfacing with a product. And so I wanted to pull back and think about some of the ways, in addition to direct interventions, that we can support the consumer to have better outcomes. And one is definitely product characteristics. These have been touched on, starting with kind of intake, but also the characteristics of the products themselves. And what we've seen is in some instances that, these products, digital products have helped to close the gap in terms of women's use of financial products and services. And so, for example, with mobile money, in a number of countries in sub-Saharan Africa, the gender gap was closed with the introduction of mobile money when compared to traditional banking services. And we know through rigorous research conducted by academics such as Suri and Jack of the M-Pesa product in Kenya, that women in particular can benefit from this. They found that about almost 200,000 women-led households had been moved out of poverty by the use of mobile money. And I think it's interesting to note that, when that kind of product was developed, a lot of thought was given into making it a very intuitive, simple product that had relatively little choice. The choice architecture was quite straightforward. So I think thinking about what products look like and product design is part of this whole discussion around consumer capabilities, and that goes also to some of the issues that Jamie was mentioning in terms of how complex are, for example, pre agreements before you even have your product. I think also it's interesting to note that sometimes we see situations where the market doesn't necessarily respond to instances where we see particular capability on the part of a group, such as in Latin America. There's research that women are performing better in credit markets and yet have smaller loan amounts and sometimes higher interest rates. So I bring that in to mention the importance of gender disaggregated data. I think part of this discussion in terms of identifying those instances where abuses are taking place, where I know Jamie mentioned, following kind of how the market was working in specific instances with regards to youth populations. The more that we have regulators having access to timely, accurate data that they can follow, including in the context of talking about gender and women's access issues and women's competencies, gender disaggregated data, we're going to be in a much better position to determine what are those gaps, what are the instances where the products aren't fit for purpose, and what are the interventions that might be most helpful. And a link to that, I think, just the importance of how we look at this issue, both from a context of financial consumer protection. We actually have a new product out at the World Bank on consumer risks from fintech, and which looks at how consumer protection needs to be adjusted in a digital financial services world. And I think part of that is also what we expect from the providers. And maybe more of a fiduciary standard should be at play in terms of what is expected from the provider community. The do no harm kind of expectation, being elevated within financial services, because as they become more immediate, we've talked about voice activated. They're something that you carry in your pocket. You're able to engage with any time of day or night, making sure that increased access is really in the being developed to assist people. And I think there are ways that the policymaking community, as well as the responsible provider community, can work to step up that expectation of the financial services being something that is taking a fiduciary or a responsible approach with the clients, because there is a huge gap there in terms of often the information that the consumers, especially consumers new to financial services, have vis-a-vis the providers. So with that, I'll stop and look forward to the further discussion with everyone. Thank you.
Thank you so much, Margaret. This is brilliant. And now let's hear from Julia Arnold. Who's next? Hello there.
Hi. I am absolutely delighted to be here. I have some slides that I will share, and hopefully they will be visible. So I wanted to briefly introduce the Center for Financial Inclusion at Axion. It's a small think tank, and I wasn't sure how well known it was before I leapt into our research. So the Center for Financial Inclusion is a research think tank created over 10 years ago and housed at Axion International. And we operate independently from Axion, which allows us to delve into critical and frontier research areas such as climate change, or data bias and algorithmic bias, which some topics were already discussed this morning. We have a long history of pushing the inclusive finance industry using data and advocacy on research such as consumer protection and financial capability. And I lead our women's financial inclusion research stream. So we recently conducted a global scan of financial capability interventions. We spoke with fintech, savings groups, providers, banks, MFIs, accelerators, et cetera. And we scanned the literature for updates on meta-analyses around what works in financial capability. And we particularly focused on interventions that targeted women and those that, in particular, as raised previously, focused on digital capability, since that's a critical component to financial capability. So our focus on women comes from the fact that despite, and I'm like Margaret, sort of repeating what others have said, but really emphasizing these points, women, despite the fact that there's a significant global effort over the past decade to increase access and improve the types of products available on the market, the gender gap still persists. And something more is clearly going on other than just like lovely products on the market. So, and we think financial capability is a critical component to closing this gender gap. Financial capability, as we define it, is the ability to apply financial knowledge and skills to everyday decisions. So with the number of digital financial services in the market today, we believe digital capability is a critical component to financial capability, and which we define as the ability to access, manage, understand, integrate, and evaluate financial services offered through digital technology. So it's a nuance there. So women and men's lives are significantly different, especially in development contexts. And Emil referenced this really eloquently. Social and gender norms drive women's control over household financial resources, access to education, and financial education, which and they inform care responsibilities and time use. So women's ability to engage with a curriculum or a class or a product or a digital service is really informed by the norms that sort of inform her life. So norms also inform her access to and usage of digital technology, and this is a critical barrier. So when it comes to building women's financial capability, their starting points, their needs, and ability to use information differs from men. In fact, for many low-income women globally, their capabilities are tied to their household and their community, which can act as a constraining force on women and mute the impact of a financial capability intervention, however well designed. So what do we know? The global research shows that behavioral science, specifically heuristics, leads to long-term behavior change, and that's the goal, right? We want to take people from lower levels of knowledge or perhaps behaviors that are impinging their financial health, and we want to sort of bring them along to smarter, better, healthier decisions for their lives. So heuristics lead to long-term behavior change. It's particularly true when the financial product is paired with the learning. But we know very little about what works for women because we have, as Margaret said, a dearth of sex-disaggregated data globally. Access, so at the Center for Financial Inclusion, we believe that digital capability must be part of financial capability. The access to and usage of digital technology can exacerbate existing inequalities, as technology is often used as a way to enforce discriminatory gender norms. In some contexts, women are not allowed to use the phone, and in many other contexts, the phone is shared among household members, and making access to and safety with the phone difficult. So what did we find? So we did a global scan, and we sort of present the data by delivery channels. although these channels sort of overlap. But with classroom-based financial education, as Jamie presented from her Consumer Competencies Framework, it's a sort of scripted general information to a group of people, and our research focused on adults rather than youth. The content is designed with a wide audience in mind, such as new customers or business owners, regardless of heterogeneity within these groups. And by and large, classroom-based financial education aims to provide basic information to many people at once, making it difficult to customize. We find that financial education for all could be the right policy, but as it is now, the commitment to providing financial education at a policy level hasn't led FSPs to invest in financial education much beyond just meeting basic requirements by the government, number of bodies in the room, number of people, who receive the information. As a result, this form of education tends to really focus on one way sort of information delivery that offers really no customization or understanding of the individual consumer's needs or wants. This form of financial education is largely separated from the use of a product. Again, it's not customized. The topics may not be relevant to everybody in the room. And as Jamie presented, there are typically 4 main topics that are discussed and taught: the interest rates and the that kind of thing, which aren't necessarily relevant to a low-income woman's everyday needs. As well, the pedagogical best practices aren't necessarily universally used. And so the droning on, as Jamie mentioned, happens more often than not, unfortunately. So the technology-enabled financial education, this is, your SMS, chatbot, or other technology-enabled platforms. Individuals can opt into this service when signing up for a new account or when seeking more information about a specific livelihood practice, such as farming. This approach may have an in-person component, particularly if it's delivered through an NGO, but the content itself often is intended to stand alone. So with examples of this type of financial education are, digital savings ledgers that embed savings goals within the use of the product, and SMS nudges to remember to save every week, or automatically taking savings out of a paycheck and sweeping it into a savings account that makes savings easy. And there are many examples of fintechs that use chatbots to teach particular information and learn about you through your use. The issue with this delivery model is that female customers have little knowledge and access to mobile technology on the whole, and it makes their trust levels and confidence with using technology as a way to learn is lower levels than men's. And most of these fintechs or other organizations don't really use sex disaggregated data to better understand their customers, to target the type of information that are needed, which means that this is, again, a kind of at times one-size-fits-all information that may or may not be useful or used by the consumer. And finally, we found there were a variety of interventions that fall under the high-touch financial capabilities. So these combine an in-person element of classroom-based financial education with the behavioral science commonly seen in the technology-led approaches. So these programs aim to do more than just educate. This combination allows for a more holistic approach that seeks to create and sustain behavior change. In addition, programs in this category tend to be more gender aware or even gender transformative. Many identify and recognize women's unique needs in building financial capability that stem from normative constraints, such as lower levels of education and literacy, etc. So some of the examples under this sort of bucket are small interventions that target the customer, that understand her needs, that working together build her confidence around using the technology or using the information. This tends to be there are interventions such as Kaleidofin, which is a fintech in India that understands the household level decision making and builds the household level decision making into the way the product is rolled out, where they're introduced to they partner with microfinance institutions. They reach the group of women, they explain to them what the product is, the women go home, they have a conversation with the household and the community about what this product is and whether or not this could be useful, and then come back again and agree or disagree to sign up. But that kind of conversation, that understanding that a woman is more than an individual, but really a part of a community, which includes the constraints that may limit her ability to actually use and leverage that product, is unique. The use of trusted trainers, an agent who is trained up by Grameen Foundation in the Philippines, that is already well known in the community, already somebody that the women may go to for help in other ways, leveraging her to then train on with financial education and increased financial capability. These are all examples of using a gender lens when it comes to teaching and imparting skills. So from the research, from the global research, some of the key messages that we want to take away from the research is that customized content leads to better outcomes. So the 4 main topics that you deliver in a classroom don't necessarily lead to the behavior change that we are hoping to see and leading to a financially healthier lives. Using somebody within the community that can address women's lower levels of trust in technology, trust in financial institutions, and build up their skill set and really act as a role model for, oh, well, if my neighbor can use it, maybe I can too. That is seen to work and have positive impacts on women. The blend of tech and touch is really critical. So as I said, really having a product that can be used independently at a time in which she can access it, but that comes with a human being where she can ask her questions and get those answered and not feel shamed. But really, at the end of the day, more research is needed because we're really lacking large amounts of data to really know what works for women, because so many organizations and fintechs do not gather sex disaggregated data. So my last slide here is just how we at CFI would like to start thinking about financial capability for women. There are so many components that feed into what her ability is to use information, and they really go both ways. So, gender responsive design is and trust and equal treatment under the law. All of these are part of a systems approach to understanding what works for a woman, what works for a community, and really understanding these factors that constrain and enable women are critical to moving forward. So that's all from me, LJ. Thank you so much.
Thank you so much, Julia. And audience, we are excited for your questions. Please enter them into the Q&A tab and we'll get to them a little while after we open our panel. Some fast typing panelists have already managed to answer a few of them by text, so you may be lucky enough to be answered before we even get around to the live bit of answering those questions. So thank you very much for that. And before our panel, we have one final speaker to treat you with, and their opening remarks will be happening very shortly. Welcome to Eliki Bolatawa. We're just waiting for your camera to come on, I think. And we're going to hopefully have the sound coming through as well. Well, look, we've got lots of sessions for you to enjoy, and I'm about to go into them, but I don't need to because Eliki, it looks like you sorted it out.
Thank you so much, LJ. And
You're welcome.
To all participants joining in from around the globe. I trust that my virtual connection finds you all in good health. I also take this opportunity to thank the organizers for the invitation to be part of this virtual event. So I'm here today representing the Alliance for Financial Inclusion. So a quick intro on AFI. It is a policy leadership alliance of over 100 financial, regulatory and policy-making institutions from over 90 developing and emerging countries. So AFI members are primarily central banks, but also include ministries of finance, bank supervision authorities, and other financial regulatory authorities. So I just don't know how to hide this on the screen. But anyways, so at AFI, we believe that regulation as well as regulators is at the core of achieving impact. For more than a decade, we have worked with regulators to define policy and regulation around DFS and consumer protection. Within the past 3 years, our work is increasingly focusing on the intersection between DFS and consumer protection in sustaining and deepening DFS. And at the core of this agenda has been how to ensure that this accelerates financial inclusion for the most vulnerable, especially women. Now, emerging trends across the AFI network point towards an increasing convergence between DFS and consumer protection. Consumers have had to rapidly learn and adapt to the increasing sophistication and complexity of DFS, which means acquiring the understanding and developing behaviors that will allow them to make effective use of these products and services. Now, DFS has become the central channel to driving financial inclusion, and safeguarding consumer is critical to its sustainability. The ongoing pandemic has demonstrated that usage of DFS is no longer a choice or an option, but a necessity for survival, especially in emergency. Hence, adequate DFS competencies is critical to entrench adoption, trust, safety, and sustainability of DFS use. Now, within the AFI network, the thought leadership in the areas of financial literacy and digital financial literacy has resulted in the articulation and development of member-driven guidance on how to facilitate DFS competencies. Over the years, our global working groups have developed various policy guidance for regulators to facilitate DFS competencies within their jurisdictions. Some of the lessons and experiences from the network emphasize on the importance to ensure that DFS competencies are evidence-driven, that local relevance are incorporated while considering global benchmarks, and that the design should have inclusion at the core, that is, to move beyond gender-neutral to gender-responsive policy and regulations, and that competencies should reflect the key policy objectives of digital financial literacy. Now, the adoption and endorsement of the Consumer Protection for Digital Financial Services policy model in 2020 by the network is the culmination of the guidance around consumer protection in digital financial services. The policy model focuses on 5 guidance pillars, as you can see on the screen. However, here, in alignment to the topic that we're discussing today, I would like to focus more on pillar 3, and specifically on the promotion of digital financial literacy. And then again here, I would like to provide a practical appreciation of how competencies are linked to key objectives of consumer protection and practical DFL interventions by both regulators and providers to promote DFS competencies. Recently, we published one of our knowledge product on digital financial literacy guideline note, and we're currently working on a toolkit as well, where we have made reference to the FIGI DFS Consumer Competency Framework because we saw the alignment. However, from the members' perspective, at the end of the day, our view is that DFS competencies should facilitate the key elements of financial inclusion. So this is when we're looking at access, usage, and quality. So on the access front, we talk about improved adoption. On usage, this is on the enhanced ease of usage of DFS and the capacity to seek redress. And then finally, on quality, to entrench safety and standards in the use of digital financial services. And to wrap up my 5-minute introduction today, I would like to touch base on the role of DFS competencies in bridging the gender gap in financial inclusion, and also discuss how regulators can facilitate DFS competencies as a mechanism in bridging the gender divide in financial inclusion. And here specifically, from the network, we believe that the regulator is a facilitator and enabler of financial inclusion. Therefore, the focus should be on how it can facilitate and enable other players to promote and support the development of DFS competencies for women. Critical for regulators as well to define the overarching policy framework, which would include the objectives, the targets, the players, and the interventions to inform, guide, monitor the development and implementation of intervention towards DFS competencies for women. And finally, it is important to integrate and streamline gender-specific DFS competence indicators across all relevant financial inclusion policy frameworks, whether it be a national financial inclusion strategy or a national financial education strategy. And so on that note, I end my 5-minute introduction. And thank you once again, LJ, back to you.
Thank you, Aliki. That's great. And thank you, panelists. Please, could you turn on your camera and microphone as we're going to develop the thread of discussion with you all interacting together. That's what a panel is. And of course, you're welcome to intervene or compliment on the reply of fellow panelists too. Audience, we love your questions. Please feel free to use the Q&A tab to do this. And you can see some questions have been answered already. We prefer that you use the Q&A one because otherwise it gets lost in the chat, and it's quite nice for us to try and get to every question. With that in mind, let's get on to our very first question for Amol, if that's okay. So let's start. Can you please highlight the evidence emerging from the ground in terms of challenges experienced by consumers while using digital financial services?
Sure. Thank you, Roger, for this brilliant question. And I think there is a lot of evidence which is emerging from the ground on challenges experienced by consumers while using digital financial services. I think some of which has already been touched upon by me in my opening remarks and by other panelists also. But I think just sort of to quickly summarize and also deep dive on some of these issues, I think a key challenge is lack of suitable products. Consumers are really not clear about whether a product which is being offered to them really suit their needs and requirements. Or because one of the panelists, they talked about a top-down approach to design of products and need for a more customized sort of approach in terms of consumer competencies. It is not necessarily limited to consumer competencies, but also about product design and ensuring suitability of products for consumers, particularly women consumers to whom the product is being offered. There was an example of Kaleidofin from India. I think Kaleidofin is doing a great job, but we'll have to see how the same model can be adopted or modified in other jurisdictions, given that Kaleidofin is working mostly with semi-urban and urban women. Does the same model work in rural areas as well? The second sort of key challenge that we are facing is limited hand-holding. So as I'd also mentioned that major effort of service providers and regulators is on onboarding and ensuring adoption of DFS products. But what after that? Are consumers able to understand terms and conditions? Are consumers able to interact with service providers and regulators to get their questions, concerns, and clarifications? I think that is where there is a huge gap, and there is lack of hand-holding from regulators as well as service providers when it comes to post-adoption or after-sale services, if we may call that, in terms of to address these challenges. The third and most important challenge is what happens when things go wrong. So grievance redress is one of those key issues which is important to ensure trust of consumers on DFS products and services. However, what we are seeing is that neither regulators nor service providers are doing their bit in terms of ensuring a more sort of great DFS, a great grievance redress facility for the consumers. Consumers are not aware of whom to approach or what is the process to navigate when it comes to their data getting lost, or if their transaction is not getting completed, or if there is a sort of mismatch in terms of amount they were sending, but the amount which is actually being received by the recipient. I think a link some of other challenges that we are facing and that we are looking in terms of which have emerged in last few years is opaque and non-transparent terms and conditions, a lot of sort of hidden charges and costs, coercive recovery practices, particularly in terms of DFS products. Consumers don't know the terms of payments, and they, including their family members and other members in their phone book, are called that this XYZ consumer who is your relative is not paying back on time. So these such of pressures are being put on consumers to pay back, and which results in sort of lack of trust and great anxiety about what will happen if things go wrong. So I think, to underline, there is a huge sort of trust deficit when it comes to DFS, and all these challenges can be clubbed under that, and that is what we need to sort of work upon in a concerted manner. Thank you so much.
Thank you. Jamie, we'll come to you next. The DFS Competency Guide seems very detailed and complex. Could you give some examples on how your target audience could apply it and who that target end user might be?
Thank you, LJ. I think I'll bounce that question back to the panelists too. I'll give my response, but I'm really curious to hear how they feel, which target audience is the most important and the best suited to respond. Aliki mentioned, for example, that this takes a multi-stakeholder approach, and I totally agree, but there are some organizations that are very limited in terms of budget, notably consumer protection organizations, as Amal and I know very well. They struggle and are challenged to have budgets, but they're very, very well suited to do this sort of work because they're the first point where consumers come when they have a complaint. They don't necessarily come to the regulator because they don't know who to access within the financial services regulator, or do I go to the telecommunications regulator? Sometimes they're bounced back and forth. So they very much know to go to consumer organizations, consumer advocacy organizations. But these same organizations, which have a teachable moment, don't necessarily have the budget to have the materials on hand or to develop the materials. As Amal mentioned, there's some wonderful things you can do with audio, and really try to reach the lower socioeconomic levels, but where's the money for that? If we talk about the national education ministries and creating a national curriculum, Julia pointed out some really key problems with that. One, you're going to get a one shoe fits all approach. Two, you're going to get these teachers that they've been asked to add and add and add. I know teachers here in the United States, they're consistently asked to do more trainings, take another training on math, upgrade your STEMs, do this, do that, jump through this hoop. They may or may not have the interest and the enthusiasm. And this is a topic that, if not presented with enthusiasm, it's not going to reach its target audience and it's not going to affect change. So then we're left with the regulators. And some regulators, I think, view this as not really quite necessary on their scheme of things. They don't really recognize the linkages with consumer protection. They might not be well suited to roll out these programs. Who are they going to work with to do that? I worked on a program in Indonesia with the Financial Services Authority, OJK, which was really, really avant-garde, I think, on this topic. They had the support of the Asian Development Bank. They have a unit within the regulator that works specifically on financial literacy. And they created these tools, what they considered tools. They were books, 9 books for the high school student age. And they were all about this thick and they were really dull. So they recognized they were dull and they said, hey, let's transform this into experiential content. So we were able to develop a pilot there. The experiential nature was that we also had career exploration, in that we had 25 different professionals from the financial services sector come in. We had fintech CEOs, we had cryptocurrency founders, we had a whole array of really exciting people who guest lectured, and then the students went out absorbing these concepts and the substance, and they went out and were asked to replicate and to do some of these new concepts that they had learned about. So it was really experiential. And on the gender note, in that course, we had over 60% participation by young women. Of course, we were dealing with a higher socioeconomic bracket, but in our experience, the young women were more enthusiastic and they grasped the concepts faster and were less risk averse. Were a bit more conservative in their approaches. We saw that in some of the activities that the students did, the young males were going out and wanting to form cryptocurrency or investment advisory websites and doing things that were really a little bit more risky than the young women were. So from that perspective, we saw that the regulator was really well aware that they needed to intervene and that the book approach wasn't working. But again, I think a lot of the challenges relate to working together to collaboration, to lack of funding, and to time-sensitive issues. It's really important to hit the youth bracket, but if you're looking at integrating this into a national currency, that's a national curriculum, that's a process that's going to be multi-year, and you're going to encounter politics, and you're going to encounter problems with the different stakeholders working together. So I think I'd like to hear from the panelists about what they think is the best approach.
Okay, panelists, you're on the spot now. Do we have any thoughts? Eliki, I saw you go off mute there at record speed, and Julia will come to you shortly after. Thank you.
Yeah, very quickly, just to respond to Jamie, which she has raised a very valid point here. I think from the regulator's perspective, at the end of the day, it's stakeholder engagement and coordination tends to be the biggest challenge on the ground. And what we've seen over the years is when we talk about financial inclusion, and you look at the three dimension, access, usage, and quality, it's now more towards the usage and the quality of what we are trying to offer to these very bottom of the pyramid individuals who are trying to improve their livelihoods. And so on the ground, to me personally, what I see is a solution that we can leverage on is the importance of stakeholder coordination and having an institution that leads the implementation on the ground. This is only when you're able to bring in all stakeholders that are all working or championing towards the same cause. If we are unable to do that, then at the end of the day, we are just wasting resources with each institution or each kind of stakeholder driving their own agenda. So key and critical before anything, stakeholder coordination is important. So that would be my very quick response. Thank you.
Thank you very much. Julia?
Yeah, I completely agree. I think international bodies like AFI and others can incentivize policymakers and governments to really start thinking critically about who within the ecosystem needs to be at the table, needs to be part of this conversation, and you know, solving some of these problems takes real creativity. So who has been left out of these conversations in the past and who needs to be brought in? You know, local women's co-ops, fintechs, you know, historians. I don't know who needs to be involved and who runs savings groups and the savings groups members themselves to kind of think through what is the content that we need, what does that look like, how does this apply to my life, and who is the best person to help me understand this, and what does it look like sort of long term to use this information, and critically as part of that is really having that understanding and that data that show the needs of women and the needs of men, which may converge but may definitely diverge, and understanding how then to be creative around reaching women in particular with restricted mobility and restricted trust, to really get to them and create solutions for them.
Brilliant, thank you. Well, this is a fantastic area where our audience come into their own, and just listening and being part of this, you never know, it might start some amazing catalysts. Margaret, I understand you'd like to come in.
Yeah, I think this is a really key point in terms of, you know, how to approach this. And I think the more comprehensive approach, when we think of kind of school curriculum, you know, there are kind of fundamental types of information that we would really hope students would get. And I think that, you know, overwhelmingly the idea is how can this be incorporated into existing subject matter so that it's not an add-on, you know, class, which probably, you know, may not be graded, which, you know, it has a whole bunch of, you know, independent issues, but, you know, part of math, part of social studies, part of, you know, really almost anything can be, you can find ways to incorporate some of these financial concepts. It does take time and resources. It's not something that is, you know, easy or inexpensive to do necessarily. You need to train the teachers. So it is a long-term approach, but I think it's, well, for countries that have that ability to engage in that kind of investment, I think, you know, there's reason to think that can be quite helpful in terms of kind of lifelong habits and understanding. But for a lot of countries, unfortunately, they really don't have those resources, you know, today. And so then you're looking at how can you best understand the needs of the consumer, you know, at the moment that they're engaging or as they are facing particular issues. And I think it's really trying to understand what is that consumer behavior you want to impact. And so going from the kind of very comprehensive, all of the nice to haves to the what is really needed in a particular instance. And I think that, you know, just to also, and I know that this is part of what a lot of us, do with this in this space anyways, but things such as focus groups, interviews, really going to the individual consumers to understand what is the barrier, because sometimes I think from the outside, whether that means other somebody coming from another country, somebody coming, even the regulator going to a community where they may be less familiar. And also, as we talk about gender, we still have big gender gaps in, leadership in terms of the financial sector in many countries, especially at the leadership and decision-making level. So making sure that you're talking, that you understand what is that barrier, because you might think it's that people don't understand X, and they understand X perfectly well, but they're concerned about, Y and Z and W. And so, how do we make sure that we know what behavior we're trying to stimulate, like increased savings, avoiding frauds, and then what is it that's the issue? And sometimes this can be skills, sometimes it can be social norms. I think that's, as we've been talking about, kind of the social piece, the psychological piece. So it's not always about training a skill. Sometimes it's about helping people to understand to be comfortable doing something different, or to help people understand that not everybody is doing this thing that they think, everybody else is doing, like to avoid a fraud. If they think not everybody's entering into the pyramid scheme, maybe it's easier to step back and say, I'm not going to join, what my neighbors are doing. So just those thoughts in terms of kind of the nuance of how to apply, such a set of good ideas in practicality.
That's a fascinating insight into outcome-based thinking and being able to examine a problem from unexpected sides. Amal, I know that you wanted to just pop in briefly before we go on to another question.
Yes, thank you so much. So I just wanted to briefly react to what Iriki and Margaret have just said. So in India, we have been trying to do, and they talked about stakeholder engagement and building a coalition of stakeholders. I think it is very easier said than done. We have been trying to do that for a very long time, but without adequate resources and ownership from different stakeholders, including the regulator, it cannot hold by itself for a very long time. We are a organization which is working with several consumer groups on the ground and trying to do stakeholder consultations, but it takes a lot of effort to keep that sort of association strong and interact with different consumer groups. Quickly on the Margaret points also, we have over the years spoken with more than 10,000 consumers on different issues, including financial services, financial inclusion, and digital financial services. It is very, very important to take a bottom-up approach to understand their perspective, concerns, challenges, risks. But it is also important to understand that it is very difficult to reach out to such consumers and understand their practices. As was mentioned, that we need to take into account sort of human-centered design and behavioral analysis. And all of this is very, very difficult to design, implement on the ground, rather than sort of designing in studios that we are sitting. So all of this needs a lot of resources, while there is will among consumer organizations to do what you are saying, but without resources, all of this will sort of not see light of the day, is what I wanted to highlight. Thank you so much.
Okay, thank you very much. Julia, I'm going to start with you for this question, but I suspect it will then expand into some other panelists' answers, which, quite frankly, I really quite enjoy. So please feel free to keep kind of joining in. So the question, Julia, is why or how should regulators, donors and providers think about men and women customers differently?
Yeah, I think one of the key lessons that we can take from the pandemic is that men and women have different vulnerabilities, regardless of locality, and the expectations on their time and their care responsibilities and women's sort of expectations really limit their ability to respond to a pandemic or to a crisis, an economic crisis, a financial crisis. So, men and women are different, and they live very different lives, mostly constructed by social and gender norms. And men tend to have more access to information, access to technology, mobility, are able to travel for work, and women are less likely. And I'm speaking broadly, but in general, emerging markets, this is the case. So when we talk about financial consumers, financial customers, we do a women a disservice. We need to talk about men and women customers, simply because when we design for the consumer, we're designing for men. We're designing along the existing market where men are already able to access and move about and control resources, and who is not able to access that market, and women are largely excluded. So if we can start gathering the data, I'm going to beat that horse. We need the sex disaggregated data. We need to understand what women's constraints are. And I know that's challenging, but it is critically important. And if we engage local actors, those who really know the space well, there's got to be a way that we can really get a better understanding of women's existing needs and constraints, and build that into the critical information, the basic information that builds and sustains financial health. That we will have more success, not just globally, but with women. It's the information that we do have around gender gap and financial literacy, where women just sort of consistently have a lower level, just isn't enough to know why that is. Women can come to a test in a different place than a man, and the interest rate information and all of that is just not necessarily the most relevant. So basically, men and women are different. And if we're going to close the gender gap, if we're going to close the bank account ownership gap, if we're going to have true, meaningful financial inclusion, we need to address consumers in that way.
Okay, thank you very much, Julia. And actually, Margaret, there's a great question here that kind of follows on from what you were saying, Julia, which is, how can gender disaggregated data play the role in better understanding those gaps in skills and knowledge of women consumers? And this is a very big question, but how can we address them?
Yeah, so I think that the issue of data is really critical. We've been having a series of conversations through FIGI. We had one, I guess, a week and a half ago about women's leadership in the financial services industry. And overwhelmingly, our panelists, were pointing to the importance of data, because if you don't have the data, it's really hard to to be able to express the importance and what gaps are missing. And that can really drive action. And without data, you can't have a real goal, you can't measure your progress. One example that I think is especially noteworthy and maybe known by some, but not all of the participants today, is Chile, where they have for almost 20 years had a really rigorous approach to gender disaggregated data. And I think a key aspect of it is that it's part of the performance metrics of the officials in government. And so it impacts their pay through their bonuses. And so that's, I think, highly unusual. I think that's something that would be good, public and private sector to have more of this kind of gender metrics with teeth. And the impacts have been, really noticeable. It's not to say that now everything has been resolved and men and women have exactly equal access, but progress has been amazing. So like, for example, in bank credit, in 2002, when they started these policies of requiring gender disaggregated data from providers, 56, when you looked at how many, the percent of women with credit compared to men, it was 56%. Now it's almost equal, 99% of women compared to 100%, looking at shares. So they've basically closed the gap in access to at least bank credits. That doesn't mean amount, but it means numbers. And women are now almost 50% more savings accounts in Chile, and they were slightly below men when this started. So it just shows, that there is this opportunity when you look at this to then make those adjustments. And that's, making adjustments through product, placements, through, product design, and through really being, gender, we like to say gender intentional. So it means, at all phases of that product, I think Amol was mentioning the consumer journey, being really aware of what women need, how women are different from men, is the product, providing what women, the kind of products and services that are needed, or addressing these deficits. I know maybe it was Amal also that mentioned the collateral deficit. Women have less physical collateral typically than men. So, if having physical collateral is going to be the gatekeeper to having access to credit, you're going to exclude women. So how can you, overcome that? In some countries where we've seen, that is a real restriction on expanding access to women. For example, work we've done in Ethiopia, we're using psychometric data, which everyone has because it's based on questions that an individual answers to try to get a sense of their credit risk to be able to then open up access to people who wouldn't have that physical collateral to provide. But you even for those kind of things, you need the data to understand the problem, to measure the impact. I think that's something else I wanted to just throw in. There's a real need for more impact evaluation. We've talked about the Julia, went through all of the different types of interventions. Almost always we go to a country and they will have 200 different interventions that they've been able to map and maybe 1 or 2 impact evaluations. So they know that they're doing things. They don't really know what things they're doing are working. And I think doing less and analyzing a bit more so that the resources are better directed would be also really helpful. Thanks.
Brilliant. Thank you very much, Margaret. I could see, Julia, you're nodding along there.
Yes, I second everything Margaret just said. In fact, Chile was one of my examples as well. So
Brilliant.
Yes, what she said.
Great. Well, I'm going to just briefly head over to Eliki for a question for you, which is kind of expands on this. How can digital financial literacy be used to expand women's competency in the access and usage of DFS?
Thank you, LJ. So earlier this year, we undertook a survey within the AFI network, and we noted from the response that 60% of the women that were involved in the survey were prioritized population segment for DFL interventions. And I think this kind of segues in well with what Margaret and Julia has shared in terms of the challenges which women face, and what Julia also mentioned, why we have to differentiate men and women as different in terms of the needs and the likes of how we would align product and services. So we then realized that the opportunity arises through DFL, for us to expand women's competency in the areas and usage of, in the access and usage of DFS. Now, in my earlier presentation, I shared that at the end of the day, DFS competencies should facilitate these 3 dimensions of access, usage, and quality. And then when we talk about usage and quality, here we're looking at the various interventions that we would like to kind of provide for women when we're talking about the appropriateness of product and services, the affordability of product and services, the availability and accessibility, including the awareness and how to assess. So the mode through the DFL can and we believe provide this expansion of competency. When we look at the digital financial literacy guideline note that was shared earlier as well, some of the examples which we kind of took note of and is made reference on, in 3-fold, which I would like to share. 1 is on managing personal data and privacy. 2, understanding terms and conditions of digital financial products. And 3, comparing information terms and conditions. What we also noted was that in one of our study on women's savings group, women that tend to use mobile applications also had improved knowledge and capability on how to use the product and services that were offered. And so here we then realized that there is evidence that digital financial literacy can expand women's competency in the access and usage of DFS. But then also we noted that it's not only from the regulatory side that has to be the stakeholder providing the enabling environment for this to grow, but also the providers on the ground and also the partners that are supposed to be in this together. And so here we also believe that DFS providers need to appropriately design the products that suits women or the target group that we're looking at, and then also partnerships. So here again, I go back to stakeholder coordination and collaboration. And then finally, what we also realize is, how can we encourage and incentivize the use of female role models? This is something that Amol shared as well in his intervention. So these are very briefly some of the interventions from my end. Thank you, LJ.
Thank you very much. Oh my goodness, can you believe that we've only got a few minutes left together? So what I'd like to do is to just ask each of you to share your closing remarks, just a couple of minutes each, please, and then we'll wrap today. And thank you very much, panelists, also for answering our questions by text today. It feels like we've got through quite a lot more information than just a normal run-of-the-mill panel. So thanks for doing double duty on that. And Jamie, let's start with you, please. What are your sort of thoughts quickly on the last sort of 80 minutes or so?
Thank you, LJ. I had some really cogent thoughts to close with, but then Amal shared that very horrific snippet about female suicides not being considered in India because they're female. And I actually had personally direct experience with that topic. But just to give some closing remarks on the DFS competencies and where we're at, I think it really came out in a lot of the presentations that strong stakeholder collaboration is essential, and we don't see that right now. In particular, coming from the consumer advocacy side, the legal aid side, I do not see that the international stakeholder groups really effectively utilize the competencies of the consumer advocacy organizations. So the organizations that have direct, immediate, face-to-face daily contact with consumers bring their complaints to them. These are organizations that essentially flourished in the 60s, but are really, really having problems now due to budget constraints. COVID has hit these organizations very severely, and I would be surprised, not surprised, if we do see that a lot of these organizations close in the next 3 to 5 years. If not, they don't survive COVID at all. And that would be a shame because they really are effective. And CGAP has recognized this, doing a really important study, I think, this past year, looking at the different roles that consumer advocacy organizations play with regard to financial literacy, financial consumer protection, complaints handling, and advocacy in the form of taking that direct knowledge and contact with consumers and putting it in front of the regulator in terms of need for reform. So I would just like to call the panel's attention to this and all of our viewers, that when you can integrate actions and activities that involve the consumer advocacy networks, please do so, because they're really, really hurting now. Thank you.
Thank you very much, Jamie. Margaret, I'm going to ask you next for some closing thoughts, please.
Sure. Thanks so much. I really enjoyed the panel today. Thanks for your great moderation, LJ. So just want to highlight, again, the gender disaggregated data. I think that's critical. Getting women into leadership roles in both the public sector and private sector in terms of gender. I think that is a critical aspect, and that can be also monitored through gender disaggregated data. I wanted to go back to something I think Julia mentioned in her presentation, blending technology and touch, and making sure that, a lot can be done with technology, but I think the trust factor, really requires thinking how to incorporate that with, maybe it's some of those consumer organizations or local community people. And then the final point is this idea of, that I mentioned earlier, of a fiduciary responsibility. I think that you can only go so far to expect consumers to be able to navigate some of this. And especially, like, for example, I'm working on data protection and privacy. And, I think almost no one really is reading these things because they're very legalese. I mean, even if you're a highly educated person in a developed country, you're checking the box. And so there needs to be that balancing of expecting more from the providers and expecting, providers to have a higher standard of care. And that requires then, effective consumer protection, supervision, and interventions and enforcement. So I think that's really, this topic has to go hand in hand with the consumer protection topic. Thanks so much.
Oh, thank you so much, Margaret. And thank you also for your kind words. It's a really interesting subject, and I do feel like we could talk about this all day. So I'm kind of a bit sad that we're coming to a close, but very happy that we've managed to open the dialogue on this. Eliki, you're going to be up next, please, for your closing remarks.
So thank you, LJ. I think from my end, as a closing, we've heard a lot and quite interesting interventions from the esteemed panel for today. But from my end, what I would like to end with is, the gains that we have made, that we don't want this to fall back. And so we all have our own responsibility to ensure that those that we are trying to improve their livelihoods are looked after. And again, the role that we play, whether we are looking from the regulatory side, we're looking from the private sector side, or we're looking at those that are on the ground, I think there needs to be a very strong commitment from all players and partners that we are all working towards the same cause and for the same cause. So at the end of the day, it's those that we are trying to improve their livelihoods should be the target. And whatever we do, we must remember that the gains that we have made for so many decades, we should not try and let that slip through our fingers. Thank you.
Oh, thank you very much. Amol, it's time for your closing statement, remarks, whatever it is, I'd like to hear it. Thank you.
Thank you so much. And I would like to compliment you for the brilliant moderation. Having done that, I have just three key points. First, consumer competency or competency framework in general is not only about consumers. We need to move away from buyer beware or consumer beware approach to a seller beware or a provider beware and a regulator beware scenario wherein all stakeholders can work together and responsibility is not thrust only on consumers. Second, one size fits all approach does not work. We need to hear from consumers their needs, perspectives, perceptions. So it's about consumers, for consumers, and by consumers. Third and last is digital financial services does not mean only digital. Digital is a complementary tool to reach out to consumers, but needs to be adapted for different consumers and can be done along with physical, so that particularly in developing countries, so that consumers can regain that trust and confidence to navigate the formal financial services space confidently. I think I'll just end there. Thank you so much.
Oh, thank you very much, Amol. And Julia, thank you for your patience. And we'd like to hear your closing remarks, please.
Thanks, Ajay. This has been a delight, and I don't really know if I have much more to add than what Amol just said, but I'll try. I second everything he said. So, I would urge anyone in the audience and their friends and friends of friends to really think about the fact that men and women are part of a larger ecosystem. Right? They're not just individuals or households, they're part of communities and policy level structures that inform their lives and constrain their lives. And so any intervention that focuses on an individual must consider all the layers that may constrain and mute whatever intervention that they might have brilliantly thought of. And one final thought is that, we have a lot of, resources were mentioned quite a bit today. There are a lot of resources going right now to interventions that don't work or that are very expensive and have very little to show for them in terms of impact. And there are budgets then that can be creatively rethought to be used for interventions and for different types of consumers that have better outcomes for themselves, for their communities, and for the globe. So we can sort of think creatively about how we can use existing budgets. Yeah.
I think that's great. Yes, it's time to stop doing the things that don't work and focus on the things that do, with the help of analysis and decent data, which is a lovely way to wrap up a fantastic panel. Many thanks to all of you. And thank you so much for taking part with such insight, with such care. And audience, thank you also for your kind attention. We're going to display a very short satisfaction poll, which we'd be so grateful for you to take part in. I like how number 10 looks very happy with a nice smiley face there. It's a little satisfaction survey. And of course, the session has been recorded, so if you'd like to watch any sections again, it's going to be available later on the FIGI website. And we have so many sessions for you to enjoy. Please be sure to check the programme online and pick out the next sessions that you'd fancy attending. The next session starts at 5 p.m. Central European Time. It's enhancing, that would be 4 p.m. Central European Time, forgive me. And it's enhancing DFS account security through improved identity vetting and strong authentication. Thank you so much for spending time together, and to the organisers and technical team. And we look forward to seeing you very soon.